I'm probably dating myself a little bit here, but when I started college, there was this song by a group called the Beatnuts, and it was called "Watch Out Now," and that's what everybody listened to. And for some reason, when I look at the setup, the option setup in Tesla stock, that is what comes to my mind if you are short this thing. And yes, there's macro issues and Twitter's going on and Elon and blah, blah, blah. But from a positioning perspective, watch out now is my takeaway. Now, the stock's been getting killed, right? It's down 50% since the September options expiration. That's just after the stock split, basically on August 25th. And what's happening is that, as you can see here, the options positions keep getting rolled, and these are all put positions. They're huge put positions, and people every single week come in and they reload on this thing. And that pressures the stock lower. When we see these levels drop, it pressures the stock lower. It tells us that people are betting that the stock is going to continue to drop. However, there is a massive expiration in January. Across the board, in so many stocks, we see massive put positions set to expire on January 20th. That's options expiration. And this is particularly true in Tesla. Now, what's interesting is if you've been following us for a while, you know that last January, there were giant call positions that were set to expire in January. And we flagged this for everybody. And the start of January was a brutal month as stocks just careened into January options expiration, and then they bounced. And why is that? Well, there were all these leap call positions, long dated calls, the Pelosi trade, for example, where people bought calls at the start of 2021, and those calls grew massively in value as the market rallied, right? And then we enter January, all those positions are set to expire, and the market gets creamed as a result. And now it's kind of the opposite, right? We have these giant put positions. Stocks have been crushed this year, right? And so to start January, all those positions are going to go away. And this is particularly true in Tesla. So let's quantify this a little bit. So what we've done here is we've measured call and put positions by delta. And on the top is calls in navy, and then on the bottom teal is puts. And the expirations are all across the bottom. And what you can see is a giant put bar there in teal for 120 expiration. That's January 20th expiration. And that amounts to $8 billion in puts set to expire in January. Now, there's no guarantees here, but we think that these puts are fuel for a very nasty rally in Tesla. Now, it could be sparked by Elon going back to Tesla tomorrow and saying, hey, I'm done with Twitter, or it could simply fester until mid-January, at which point these positions start to decay, and that in itself could really lift Tesla up and be a major catalyst for a big rally. But either way, we think that these positions could be major rally fuel and could cause a lot of trouble for shorts. So we hope you found this information valuable. If you have any questions, put them in the comment section below. Hit subscribe or head over to SpotGamma.com and get a free 7-day trial of our Equity Hub service, which allows you to analyze Tesla each and every day.